It's Friday the 13th. I'm FX Flow and this is CurrencyTransfer.com's market update. So the main headlines are that UK inflation data next week could be critical to a UK rate hike. The euro is down slightly on the ECB minutes and a weaker dollar rallies slightly on a slightly improved risk horizon. So in the UK, there are several factors that have been driving the recent sterling rally. The main two drivers are still the Brexit agreement over the transitionary period and the prospects of a UK rate hike. This week, the UK data has largely been on the softer side, not weak enough to derail any interest rate hike, but it's certainly enough to raise some doubts. Look at the interest rate futures. They're down to 66% priced in, down from 70% earlier. That said, yesterday sterling euro managed to break through 115 quite comfortably, touched a high of 115.65, representing strong value against the euro, even though it closed around 115.40. Cable, however, is still showing good value, but it's struggling to get through a stubborn resistance at about 142.40. Consolidation, therefore, is likely at the end of the week today. Next week is going to present some significant outlook for the short to medium term of direction of sterling. And anyway, who's crazy enough to go into a trade on Friday the 13th? Not me, that's for sure. From the Eurozone, the ECB minutes highlighted concerns over euro strength and indeed concerns over the effects of any trade war. Further euro strength could affect plans that are under discussion potentially over the removal of the asset purchase scheme towards the end of the year. Next week we see a bunch of Eurozone inflation data, all forecast to come in line with current readings around 1.4%, although the month-on-month figure is forecast to pull back to about 0.9%. The main reaction yesterday was against sterling, as I mentioned earlier, hitting 115.65 on the high. Euro dollar, very little reaction, but that's also more reflective of the current weaker dollar as well. Over in the US, the Trump risk, if you want to call it that, still affects the market. Dear old Donald, he tweets about Syria, they should be expecting rockets anytime soon. Then presumably the national security had a quiet word in his ear and talked him down from that. He toned things down accordingly and suggested that the timing is still fluid. The more considered approach was well received by the market for the dollar, which moved away from recent lows. The dollar index touched just shy of 90 before closing around 89.75. Not much on the calendar today, so it's likely that we will see a pretty uneventful Friday the 13th, fingers crossed anyway. So I'll wish you a great weekend and I'll see you early next week.